So what options does the Federal Reserve still have, and are they likely to be effective if employed? We're joined now by Walter Owens. He is the head of commercial banking at TD Bank. TD Bank recently broke into the top 10 list of the largest banks in the United States. Walter, always a pleasure. Thanks so much for coming in. I'm going to put you on the spot here.
Okay.
Play central bank chief for just a moment. What other options are there? I mean, interest rates are at near zero levels. We're going to conclude quantitative easing part 2. That's the purchase of the $600 billion worth of treasuries. Is the Federal Reserve, I mean, are they out of options, do you think?
Yeah, as we looked at it internally here, and we've had a lot of conversations in terms of what would Fed policy mean for the commercial banking and the broader retail banking space, our view is at the moment there aren't a lot of options, and we really don't expect him to do anything based upon where we are from an inflation perspective and an interest rate perspective. So we really don't see them having many options today, Pimm.
All right, so that means you've just got to get on with business.
Exactly.
So what is business like? What is the health of the banking industry right now in the United States from your perspective?
Well, if you look at it, I think a long-term perspective is probably the best way to look at it. And internally within TD Bank, the senior management team got together and took a look at what a financial crisis would look like versus a credit-driven recession. And to be quite honest with you, as we've looked at this over time, it's playing out exactly as our TD economics team thought it would.
So you did like a fire drill?
We did a fire drill, and we said, what would this look like over the next 2 to 3 years? And the preparation for the team internally is, look, a financial crisis is going to be a very long-term issue that's going to stay with us over time. Growth will be slow. Unemployment will stay elevated. And our strategies within the bank were to deal with a moderate to slow growth economy over the next couple of years, and that's what we're prepared to do.
So what kinds of things are you doing? Because, you know, unless the bank goes out and makes loans, you don't have assets that are growing.
Well, there's a couple of things that you can do. You look for underserved areas. So on the retail side of the bank, we went out and bought Chrysler Financial.
Okay.
So we have excess deposits totaling almost $80 billion. So now we have a terrific asset generation machine, which over the last 2 years in a recession, delinquencies on auto loans is only 2%, which is quite striking when you compare that to some of the other retail categories.
2% delinquency for auto loans.
2% delinquencies.
So they're not as bad as many people maybe had expected.
People need to drive to work.
Yeah,
that's what we've learned.
And we're at about 12 million annual units, even though it's down a little bit from some of the forecasts. We're about 12 million annual units for automobiles.
But here's
in the
a terrific business, right, that was sidelined for the obvious reasons. Now it's part of a bank. It can generate a lot of assets, and we're looking forward to actually growing that franchise over the next couple of years. On the commercial side, we have similar strategies. We thought about how can we take advantage of underpenetrated markets. So for TD, we're going up market into middle market banking, corporate banking, and there's several cities that are new to us. So we feel quite good about being able to grow in a slow growth market.
Where regionally are you looking right now? Because I know that you've got a big presence in New York, in the Northeast. You did the Commerce Bank acquisition. That's worked out for you. Tell us about some of the other regions.
Yeah, what's exciting is that we looked at our organic growth capabilities over the last 7 to 10 years. And what we found is we have become a major player in New York, not through acquisition, but by building stores year in and year out. And today, we're in the top 10 in terms of deposits, but we're even stronger in terms of deposit share and even stronger in terms of deposits per store. So as we took a look at that, we said, why don't we go to Boston and do the same thing there? Why don't we go to Washington, D.C., Miami? All the cities on the East Coast are big opportunities for us.
I want to thank you very much. Walter Owens, a pleasure, the head of commercial banking at TD Bank.